This week's theme on the Retirement Quick Tips podcast is, are the new Bitcoin ETFs a good investment? Now, hopefully you've been listening to the other episodes this week, because I think for the vast majority of people, especially people who are already invested in Bitcoin, or I should say speculating in Bitcoin, it's not an appropriate investment. It's a highly speculative, highly volatile asset. And most people just cannot stomach the volatility. People are invested in Bitcoin because they are trying to get rich quick. They have this intense fear of missing out, and they want to double their money in a month. And that's why they're investing in Bitcoin. It's not a good idea to jump in the pool when that's the viewpoint of pretty much everybody who is investing in an asset class. I do not like Bitcoin. I don't think it's an appropriate investment for most people, even with the rubber stamp approval now that you can buy these new Bitcoin ETFs. They're a lot more accessible. They trade like a stock, and you can buy and sell them at any time, and you don't have to deal with the complexities of the old-fashioned way of buying Bitcoin, or the traditional way of buying Bitcoin previous to this year. Okay, so there are a few things I want to cover. So if you want to buy Bitcoin, maybe you already own some Bitcoin or other cryptocurrencies, how much should you have invested in this area? And I want to address that because I think that this is very important. There are those of you listening who already own crypto. There are some of you listening who are going to be interested and want to buy Bitcoin. So we need to think this through and make a good decision about how we speculate in this area. The first consideration is if you already own Bitcoin. Ideally, if you own Bitcoin and you've been trading in cryptocurrency or Bitcoin already, this should not make up more than 5 to 10% of your overall mix of investments. So a lot of people, all they have is Bitcoin. That is bad. We don't want that. Because of its speculative nature, you really can only allocate a very tiny percentage to your overall net worth to this area. So you want to be careful. If you have maybe 15, 20, 30, 40% of your financial assets or more, I've seen people with much more than this, like virtually all of their net worth is tied up in crypto or Bitcoin. That's very dangerous. Again, this is not a traditional investment. It's speculative. You can see the value just evaporate tomorrow. I would think that if you have half of your net worth tied up in Bitcoin, you do not want to lose that. So ideally, you would get down to 5 to 10% if you already have a lot more than that in Bitcoin. Obviously, you want to be careful about this because there's taxes, tax implications for selling if you have made profits in Bitcoin already. And it's back to basically its all-time highs at this point. So it is a good time to start selling. Why wouldn't you want to sell at the top? Like if you look historically, Bitcoin is about as high as it's been. Now, a lot of people aren't going to do that. They're going to hang on because they think, it's only going to go up from here. And it very may well do that. However, I would much rather own 5 to 10% of my portfolio, not 50 or 60% of my portfolio in Bitcoin, because you will still benefit from that. And you can take gains off of the table. So if you timed it right, if you do have gains in your portfolio, the prudent thing to do would be to really trim that back, get down to 5 to 10%. It may take you a couple of years because of the capital gains tax consequences, whatever that might look like. Again, that's different for everybody, but maybe you don't sell it all now or in 2024. So depending on how long you've owned crypto or Bitcoin, you may need to just be careful and strategic about selling it. But I think a good goal would be to have it make up no more than 5 to 10% of your portfolio. All right, so since Bitcoin is what I would call the best house in a bad neighborhood when it comes to cryptocurrencies in general, if you own other cryptocurrencies, I would definitely unload that first. So the Bitcoin ETFs are still subject to manipulation, but the risk of fraud is much lower compared to a lot of the other cryptocurrencies. If you're confused about what I'm saying here, think of cryptocurrencies as an umbrella. And within that umbrella, there's lots of different cryptocurrencies that you could buy. And Bitcoin is just one of those. It's the most widely held one. It's the most well-known. And so you want to kind of get out of these other niche cryptocurrencies. Consolidating into Bitcoin makes a lot of sense, especially with the new Bitcoin ETFs. Like that's the type of crypto that the larger world of finance is embracing. And so I think it makes sense to get out of those even more speculative investments. At least it won't be quite so subject to manipulation, risk of fraud, etc. Okay, so what if you don't already own Bitcoin? Well, you could put it into what I would call a mad money bucket. So some clients of mine, they have a percentage of their portfolio that they want to play with. And so we call it their mad money. It's something that they can either trade on their own, or they call me up and say, Ashley, I want to buy this stock or this investment. And we treat it as something for them to have fun with. But if they lose all of it, it's not going to make or break them. If they double their money, triple, 10x their money, great. The mad money concept, I think, is where Bitcoin fits in. If you aren't already invested in Bitcoin, I wouldn't have 5 to 10% of your portfolio in Bitcoin. You might allocate 5 to 10% of your total portfolio if you can afford to do that to a mad money bucket. But Bitcoin is usually just going to be one holding of many in that bucket. I think overall, 1 to 2% of your overall portfolio in Bitcoin, only if you really want to buy Bitcoin. I think that's reasonable. Nothing more than that. Like 5% that's in Bitcoin alone, it's too much. It's just too speculative. It's just too volatile. It'll really impact the volatility of your portfolio. And especially with the fact that it tends to crater and collapse when everything else is hitting the fan. You don't want to make your problems worse and see your portfolio drop even more. And that's exactly what happens if you allocate too much to this area. So get down to 5 to 10% if you have more than that already invested, but probably no more than 1 to 2% of your portfolio if you're really, really into investing in Bitcoin and want to give it a go. I think that's reasonable, and I wouldn't recommend any more than that. All right, that's it for today. Thank you so much for listening. My name is Ashley Michike, and this is the Retirement Quick Tips Podcast.